Hello everyone, it's Paul here, and in this video we're going to be covering how to use the ATR to calculate a stop loss and a take profit. This question actually comes from Miguel, so thank you very much for adding to the community, Miguel. That automatically makes you a successful trader if you are not already. You're people asking questions, that's how we all learn. So thank you. I'm going to be covering it on two different time frames because I use it in two different ways with the trading strategy that I employ. I'm going to show you on the 15-minute chart first, and then we're going to move up to the 2-hour chart, and you'll see the difference on how I use the ATR to calculate my stop loss and take profit. So if you know my strategy, you'll understand that this right here is a trade opportunity. Not because of the sell, although that is nice to see when it lines up with a trade. It's like I added a little confirmation. So this closing of the candle here just crosses below my leading edge on the equalizer cloud. So therefore, that we're going to enter the market with a short. And the reason why is because I've got the strength. You can see my strength indicators showing there's enough strength to support it, and the volatility is also high enough. And my oscillator just flipped, so that works too. Everything's just lining up beautifully. So we're going to go ahead and open a short position. And the way that I do it is I hover over top of that candle and we look at the ATR. That's the number there, that ATR. This is the average true range of the last 14 candles. So I can see that it's 48. That means, now this is the 15-minute chart. On the 15-minute, I'm going double my ATR. So my ATR is 48. That means I'm going to go 96, but I'm adding my spread from my broker as well, so that I get a full trade out of that. So 96 plus 12 ticks. That's I got 1.2 spread, 1.2 pips on this pair with my broker. So 96 plus 1.2, that's 108 ticks, 10.8 pips. So now we just see how that market plays out. Now, of course, we see it drop down, and what I'm doing is I'm taking those two trades. Again, watch my other videos to see how I do that. So I'm taking two trades. The first one is taking profit at the ATR times 2, and at that same moment, my second trade has a trailing stop that gets set to break even because it's set at ATR times 2. And it just continues to follow all the way down. So this there becomes my full trade. I'm minusing the 1 off of it because I'll get into that another time. But there we go. There's my win. That's my win ratio there. So 2.41. It's actually 1.41 because we have to take into consideration that we're taking the two trades and they're split in half. Again, I'll get into that. It's a little bit more advanced, but it's a 1.41 reward to my risk. So that would make it 4.2, about 4.2% increase in my balance on that trade. Okay. So that is how I do it. Again, it's a 15-minute. I'm doubling my ATR times 2, and I'm going 1-to-1 risk to reward. Now, let's just go to the 2-hour chart and do the same thing. So we take a look at, there's a switch of the EQ here, and so here it could be a trade opportunity, and there is. Okay, perfect. So I've got this right there, and my ATR is 146 on the 2-hour. So I'm opening up a long tool because we crossed above the green line, my leading edge of the equalizer. And now, so 146, that means my risk, my take profit and my stop loss, instead of going 2 times my ATR, I'm only going 1.5 times my ATR. So if it's 146, then my stop loss is going to be 292 plus my spread. So that would be 292 plus, it'd be 204. So 204 ticks on my stop loss. And what I'm doing is that I'm going 2-to-1 reward to risk ratio. So instead of going 1-to-1 like I did in the last example, on this one I'm going 2-to-1. So I take my stop loss, 204, and I double that. Now I'm going to 408, and we just click OK. And as we can see here, that worked out quite nicely, and it appears that that would have went down and then back up. Yep. So then my second trade. Oh yeah. Okay. So I'm getting this right off the bat. When this occurs, when this moment occurs, my trailing stop on the second trade then bumps up to my trailing stop at 1.5. Sometimes, again, depending on the pair, and just make notes, keep notes to maximize your profits. Sometimes I go ahead and I start that trailing stop when it reaches the 1.5 mark, the ATR 1.5. But typically speaking, I'm waiting for it to go all the way to my take profit 1, and then that activates my trailing stop at the 1.5 times ATR distance. So in this case here, it would have continued rising. Let's see here, 1.5, 2, so 756 down to, yeah, okay, so my maximum would have been here. Yeah. And that would have been a beautiful 2.71 reward to risk. So 2.71, that would have been 6% plus 2.1, so that would have been almost 8% increase on my balance in that trade right there. So there you go. That is how I utilize my ATR to calculate my stop loss and my take profit. If you have any questions, definitely ask them. Comments are always welcome. Check out my other videos, and in the description you'll see there's a link where you can book my time. Over the next couple weeks, I'm actually working with traders for free. We're sitting down together and talking about how to use this strategy on their charts. So if you wanted to work with me for a little bit, we'll do one-on-one. We'll share our screens, and you can see exactly how I get things set up and model the same thing on your screen. And that way you're set up to trade like a titan. So thanks so much for watching, and keep the questions coming. Love it.